Hello, this is Sophia Dominique for 644online.com, and this is the very first video in a series on what is money. We have a free, open to the public, by invitation, which I'm making to you now by contract, Telegram group that is going to be listed in the show notes below. If you're interested in learning more about this and getting more details and getting more in depth. But first, let's talk about what is money. So typically, money is going to come in two forms. It's going to come in the form of credit, and it's going to come in the form of cash. Now, you may be thinking that credit is something that you're already familiar with, but 9 times out of 10, that is not the credit in which we are discussing. Because the credit that we're discussing is basically something that is only dealt with by the what's indicated in blue on my little diagram here. So Board of Directors deal in credit, IRS deals in credit, Federal Reserve deals in credit, and beneficial owner deals in credit. And why is that? Because credit is the new money of a living person. Credit does not go into the hands of a quote unquote dead person or quote unquote taxpayer or a debtor. Debtors do not deal in credit. Okay, it has nothing to do with what your credit score is, how much credit card debt you have. That is not the credit that we're talking about. And at the bottom of the page, I have the definition of credit. And credit is a tax credit is a dollar for dollar amount taxpayers claim on their tax return to reduce income tax they owe. So the only way that an individual can be issued credit is from their tax return. Most people are not using the American Accounting Service or Internal Revenue Service, as they're known, to document tax credits, because that is literally what you use them for. You use them to document tax credits, and that's their primary function. Okay, so cash, on the other hand, is any currency and coin. They don't say any, but they really mean any currency and coin. And that's according to the Federal Reserve Operating Circular number 2. Now, why is that important? It's important because if you believe that you are making a payment for an account in anything other than a cash payment, you would be wrong. So uh, if you pay in dollars, if you pay in money orders, if you pay in checks, if you pay an account from another account, that is all considered a cash transaction. So, in all actuality, most of us deal primarily in cash transactions. Credit transactions, again, when you do transactions based on the credits that you can only receive from the IRS. That is how you as an individual receive credits. But there are other ways to receive credits, and there's other ways to settle accounts. And we're going to talk about that a little bit. But first, start at the very bottom, and I'm going to highlight as we go along. So hopefully you'll be able to follow along with what I'm doing here. Let me take this off. All right, so first let's start with you as a taxpayer. Oh, that is way too dark, which is what I was worried about. I'm sorry, yellow. Let's start with you as a taxpayer, okay? The taxpayer has a few different ways that they can handle a debt that is owed, because technically, when you enter into a contract with the business, you are accruing a debt. But we'll talk more about that in a few minutes. So you can start this process by, again, paying cash. to the business, right? And then when you pay cash to the business, at the end of the year, you report that cash payment to the IRS. This is basically the triangle life of the taxpayer. This is all they are involved in. Paying cash to account. Remember, cash, any currency and coin. That's what you're paying to the business, and you report those cash payments to the IRS, and that's your life. Okay. Now, once you pay cash for that account, more things happen. This is the stuff that you don't know that happens, that you have heard that happens, but no one has really been able to put a clear explanation of what goes on here. So as a taxpayer, you pay in cash for the account. The business reports that account payments right here. They report the account payments to who? To their board of directors. Okay? Their board of directors reports taxpayer payments to the IRS. The IRS reports those payments to the Federal Reserve. It shouldn't be. I got those backwards. I was wondering what happened to that. They report the payments to the Federal Reserve. Now, what does the Federal Reserve do with this information? Many of you all are very misunderstanding of this process. You think the Federal Reserve does something other than what I'm about to explain right here. But if you review the Federal Reserve Operating Circular 1, specifically their FedNow service and what FedNow service does and how it interacts with these different organizations, you will be clear that this is what the Federal Reserve actually does with that information. The Federal Reserve issues the credits to the IRS. The IRS issues the credits to the Board of Directors. The Board of Directors issues the credits to the business. And what is supposed to happen, let's use a different color for this because this never ever happens. The business is supposed to return the cash to the taxpayer. Now, why is that? You may be wondering. And it's because, let me put this in a lighter color because it's a little bit dark. This is what they don't do. Okay, why does this never happen? Because the business is stealing. I mean, I don't know how else to tell you. They're stealing. Okay, so this is the reason why they don't do it. The business, not only do they keep the cash that you paid, they keep the credits. This is what is happening. This is where the breakdown is. This is why these businesses are in trouble because they are not doing what they're supposed to do. Like, there's no other way to, I'm not going to sugarcoat this. I'm not going to, take 10 hours to explain this to you. The businesses are stealing. They're stealing credits from the Federal Reserve and they're stealing cash from you because they are supposed to return the cash to the taxpayer. Another thing that is not happening because the IRS is also stealing is that they are supposed to issue the taxpayer credits. So the life of the taxpayer, as they report the cash payments, the IRS should be issuing them tax credits. Now, in some cases, they do issue you tax credits, but in many cases, they do not. And that is because there's paperwork that you need to fill out in order to be issued a tax credit so that the accounting can be handled. Remember, the IRS, they are accountants. They are doing the accounting. They are balancing the books. And the reason why we have trillions of dollars of debt is because you as an individual are not balancing your books. It's not for one person to try to take care of all of the debt. It doesn't work like that. You as an individual need to handle your own debts. You need to handle your accounts. And then they will issue you tax credits. Now, the other part to this, before I even go on to the other part, because it's not going to be a long video. You should really be able to understand what I'm saying. So I'm going to go over it one more time. The taxpayer pays cash to the business. The business reports the account payments to the board of directors. The board of directors reports the taxpayer payments to the IRS. The IRS reports those payments to the Federal Reserve. In turn, the Federal Reserve issues credits to the IRS. The IRS issues credits to the board of directors. The board of directors issues credits to the business, and the business should return the cash to the taxpayer. One thing you should notice here is that The Federal Reserve is the one who issues credits. But a credit is not a credit until it is documented with the IRS, which it says in the definition. A tax credit, that's why it doesn't say a business credit, it says a tax credit. Even if it's a business tax credit, it's still a tax credit, which means you have to report it to the IRS. It is not a credit until it is reported to the IRS on a tax return. Not when you file a 1099. That is not reporting a credit to the IRS. It is as a part of your 1099 that the credit is documented. That's why it's not a tax credit until it is documented. Okay? Be really clear about that. A tax credit is a dollar for dollar amount taxpayers claim on their tax return to reduce income as income tax they owe. Okay? Number one, they cannot tax you on your income. So, as I always say, the legal minimum is zero. They're not allowed to tax you on your income. Okay? That's slavery. So, anyway. So, the IRS, because you are not documenting your payments as credits the way that you're supposed to, your cash payments, because you're not properly documenting them so that you can be issued tax credits, sometimes the IRS will say that you owe because you documented income that was brought in as income instead of some other way that you can document it, which I'm not going to go into. But just understand that you cannot be taxed on your income. You cannot be taxed on your income, but you can be taxed on your stupidity, and that's basically what's going on. Not that I'm trying to insult anyone, but it's lack of knowledge that has got us into this mess. And so you have to first accept the responsibility to say, I didn't know this. There's something that I have to actually do to correct this. And when you do that as the first step, it's just like they say with AAA, or AA, whatever that stuff is. When you go to Alcoholics Anonymous, the first step is acceptance. The first step is accepting that you had no idea that this is how this worked. And even if you knew that this is how it worked, you have never seen it laid out so simply. Now, I'm going to add a monkey wrench into this, which no one explains ever. So, if you don't understand what a beneficial owner is, the beneficial owner is the documented owner of the taxpayer. Now remember, you as a living individual are not the taxpayer. Your straw man, social security number man, the dead man is a taxpayer. Which is why you can't be taxed on your income, because how can you tax a dead man on income when the man is dead? Okay? So the beneficial owner is the person with the beneficial interest in the taxpayer. Are you automatically a beneficial owner? Absolutely not. That requires paperwork because it has to be documented that you have a legitimate interest in the taxpayer. Why is that? Because the business can say they have interest in the taxpayer, the board of directors can say, the IRS can say, the Federal Reserve can say, all of these different steps along the way can say. Plus, if you have any, if you receive any social benefits, if you live in a state, if you have been to jail, whatever it is, all these different people can say that they own you. They have beneficial ownership because you have been doing business with them in a debt instrument. And so, as a result, they can all say they have beneficial ownership. So, technically, the beneficial owner is the one who over here manages the credits. This is what the beneficial owner does. In a short version, they manage the credits because remember, cash is currency and coin. The beneficial owner can't deal in cash. The beneficial owner is a living person that can only deal in credit. The taxpayer is a dead person that can deal in cash. I hope that makes sense. So, if the beneficial owner manages the credits of the taxpayer, that means the taxpayer has to have credits. They have to be they have to have this healthy relationship with the IRS where they're reporting cash payments and they're being issued tax credits. Okay. Now that will take care of this whole IRS being fraudulent. I mean, not fraudulent, IRS stealing issue, right? Because they can't steal from you when you are properly documenting your tax credits. Okay. Now, how do you deal with this business then? This is the part where a lot of people are stuck. They don't understand. They don't know. You may have tried many different processes, from accepted for value, for a bunch of different stuff. But if you were not in the beneficial owner status, the beneficial owner has no business with the business down here. They cannot interact with the business because, remember, the beneficial owner doesn't deal in cash. How can the beneficial owner who doesn't deal in cash deal with the business who deals in cash? See, these people down here, they're in black. These are dead entities. These are entities that do not contain living people. So only dead entities can deal in dead currency, which is cash. Okay? The beneficial owner, just like the Federal Reserve, just like the IRS, and just like the Board of Directors, deals in credit. And so in order for the beneficial owner to rectify this issue of the business not honoring or not doing this part where they're supposed to return the cash to the taxpayer, the beneficial owner up here requests records and demands remedy. The beneficial owner is really the one who can get remedy. I know a lot of people think that the taxpayer can get remedy. Everybody else, any person, oh, I'm a living person, I can get remedy. No, the beneficial owner is going to be the one who can get remedy. Why? Because the remedy has to be in credits. Because you're talking about a living person. As soon as you're a living person, this taxpayer issue goes out the window. So for people who have done a lot of different things trying to get processes to work, it is because you're not in the proper status that these processes won't work. When you're in the proper status, they'll all work. Why? Because you don't deal with the business. You deal with the board of directors. That's the reason why the processes work, because you're a live person dealing with a live entity. Person to person contracts. That's what a trust is. These are the rules of the trust that we're all in. These are the rules. The reason why your processes aren't working is because you're ignoring the rules. And I know people want to be nice about it and beat around the bush and all of that. It's not helpful. You need to know that none of your processes will work until you are in the proper status, or you are you have a registered agent. That's not on here. So let me write in. Or you have a registered agent in the proper status. So you either have a beneficial owner or you have a registered agent. Then these processes will work. So it's not that you can't do it yourself. That's not what I'm saying. What I'm saying is you have to get into the proper status. Once you're in the proper status, the beneficial owner can request these records up here. See, when these credits are issued and these payments are made, these things are supposed to match up. And the beneficial owner is the one who can request the information from the board of directors to make sure that the information is correct, based on what the taxpayer reported to the IRS. So the checks and balances comes with you or your registered agent being in the proper status. Once you're in the proper status, your remedies will work. They have to. Otherwise, you have a remedy for your remedies not work, which is the equity court, which is small claims court, if no one ever told you. So if you are in the proper status as the beneficial owner, you have your registered agent set up, you can go to the board of directors, request the records, demand the remedy, and if they ignore you, you can take them to equity court. Well, wouldn't be you, it would be your registered agent that takes them to equity court to demand the board of directors bring out the records, and the court will issue you your remedy. So if you're wondering why your processes haven't been working, what 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 money are you dealing in? Because, for example, I'm not going to make this video too much longer. But for example, let's say you as a taxpayer are requesting your records from the business. Well, the business is only going to give you the cash records. They're not going to give you the credit records. So you can request the cash records is just what you've done. The credit records is what you want. The credit records can only be issued from the board of directors. And so if you don't understand this process and where to get these credit records from and who the credit records come from, Federal Reserve, you can't get remedy like that. But once you as a taxpayer know, hey, my credit records of what's been going on with the Federal Reserve are going to come from the board of directors, not from the business, then you can make this thing work a little more easier. I'm not giving you all the details in that because that's something that you'll have to do your own research on, or like I mentioned, we're going to have we have a Telegram group. We're going to be talking about some of these things in a little bit more detail, and you're welcome to join us. Because I see what happens to people who, first of all, anything dealing with the credit is private, which I'm not going to go too much into public versus private right now, but just understand that those are private transactions. So you, as the cash dead entity, are not allowed to request public private you're not allowed to request private credit transactions. Even though you're allowed to have them, they're going to ignore you. They're not going to give them to you because you're not in the proper status. When you are in the proper status, these things aren't a problem. They're only a problem when you're not in the proper status. So this is why, being in the proper status is really the very first step. Before you try any remedy, you need to get into the proper status. Now, what I will say is there are individuals that offer this information on status. They charge a lot of money and they don't understand it. And this is no offense to anybody who teaches this, because I'm not trying to be offensive, but I didn't learn this from anybody who offers a paid course. Nobody who offers a paid course helped me to figure this out. I figured this out by working with a partner, going back and forth, trying to figure out what's going on, and then getting into actual records and asking the questions. I'm willing to divulge some of that information because I think people should understand why their processes aren't working. Because you may have paid a lot of money for a process. Like, for example, people who have done accepted for value, right? You paid a lot of money to learn accepted for value. And it doesn't work anymore. And the reason it doesn't work is because you're not in the proper status. And it has nothing to do with a bond. That has to do with your status as beneficial owner. And even the people who teach beneficial owner, unless you pay for their deluxe packages, they don't actually give you the most important documents that are necessary to become a beneficial owner. What they do is they give you enough so that you have to go back and pay for something else, and because they can't explain this right here. And this is the most important part to understand. There's no point in being a beneficial owner if you don't understand this part. There's no point in having a trust if you don't understand this part, to be honest. Public versus private is really important, but if you don't understand what is money, then public versus private don't even make sense. You got to get down into your mind what money is and how it works and how you use it before you should even bother with trust, in my opinion. Because what will happen is you'll be trying to bring value back to a trust, but you have no right to value because you are in the taxpayer status. If you're in a taxpayer status and you think a private trust is going to protect you, it doesn't work like that because you have these other people that can claim you as a beneficial owner. And so when push comes to shove on your private trust, because you're a public entity who has no beneficial ownership in yourself, now you have a right to claim beneficial ownership, but if you have not done it, if you have not actually claimed the beneficial ownership with a process and a method that makes sense, that you can understand, that you can defend, doesn't matter, because it doesn't even matter what the process is. If you don't understand it, if you can't defend it, push come to shove, it doesn't matter. It simply doesn't matter. So I am attempting to encourage people to really get down into their system. What is cash? What is credit? So they can understand what is money, because money is the medium of exchange. But you're not exchanging cash for credit. Or rather, the only one who can turn cash into credits is the board of directors, the IRS, the Federal Reserve, and the beneficial owner. No one else can turn cash into credits. It doesn't work like that. Those are only ones, because they're the only ones who have access to credit. Now, I didn't describe the inverse of this line from the board of directors to the beneficial owner, but when you demand your remedy, the board of directors pays the beneficial owner or the registered agent in cash, and that beneficial owner returns that cash to the taxpayer. So then you have a complete system with that as well. So it's not rocket science, but I know I've never seen it explained. I've seen people talk about it. I've seen people talk around it because they don't understand really how this happens. But only the people in the blue can exchange credits for cash, for currency. And the people in the black, the business, the taxpayer, can only deal in currency and coin. So I hope this has been helpful. I hope this makes sense. If you have questions, please leave them below, and I'll take them and answer them in another video, the ones that are the most relevant. So peace and blessings to you all. Have a great evening.